Boom. Should be good to go, I think. There we go. Yeah, we're good. All right. What's up, everybody? Welcome to the Chaos. My name is Brad. The stock market is crazy and chaotic, and I made it my mission to help you guys own it. And man, we have been going through it this week, haven't we, folks? But first, let me get off to the starting five guys. Jeff Chocolate was the first one here. Congrats, my man. Eric Brands, Rudy Brown, Oliver Thorpe, and the Neck Breather. I couldn't wait to say that name. Great name. But you guys are my starting five. Now, the stock market has been all over the place today, yesterday, Friday, even, towards before Thanksgiving. It's been all over the place. And today there isn't a shortage of any stories today as to what's going on in the market and why things are happening the way they are. Obviously, the big story has to do with the Fed and Jay Powell not playing so nice anymore. We'll get into that, some other reasons why the market's doing what it's doing, and my thoughts on what I actually did today as well. It's going to be a topic of discussion, but then I want to hear from you guys. What are you doing? Are you panicking? Did you sell everything? Are you sitting all in cash? Did you buy a bunch of stuff today? Let me know in the comments below. I'd love to hear from you guys. But before we get into any of that, let me let you guys know what this show is brought to you by, and that is ownthechaos.com. If you guys go to the link in the description and go to ownthechaos.com, we put out a free watch list every single morning before the stock market opens. We'd love to have you guys as part of the Chaos crew. There's all kinds of other stuff in there as well. A more detailed version of that list, kind of like the premium watch list, if you guys will, over at ownthechaos.com. We also give free trade alerts and portfolio access, all that good stuff, as well as a free a live stream, not free, a live stream in the morning too, where we get to discuss what's going on before the market opens. Also, you get to see my trades live as they happen. So go check all that out at ownthechaos.com. We'd love to have you guys there. The links are in the description. Or if you want to check out also, just click on the join button just to get it quick, fast, and in a hurry. We'd love to have you guys as part of the crew. So, man, it's been tough, right? I mean, I'm down today. I've been down all week, and it's been frustrating. Not gonna lie, but here's the thing: like, you look at why the market's moving the way that it is, and if the Fed's gonna say stuff they are, you're going to expect to move down, right? And then if there's another variant that comes out, you're going to expect the markets to move down. But what do you don't expect to have happen, right? For this to sustain. We're going to get into that. Let me go ahead and just check in with you guys. Down all week. Well, I mean, yeah, been down all week. Really since Friday. It's been sucky. Says Chris Lauren. It's only Tuesday. It is only Tuesday. It feels like the last 2 days have been probably like 10. Man, Chris Larson just going in on me here. Will you admit that Bitcoin isn't a hedge for inflation? It's not going to 100K by the end of the year? No, I'm not going to change my stance on that. I think that your inflation as it relates to the dollar, my friend. I mean, even gold's down today. So that doesn't make sense either, right? So no, not going to change my stance on that. Have a lot of reasons to believe that Bitcoin's going to continue to go up. And actually, Bitcoin, I believe, went red to green today. Did it not? I didn't check on it right before we went live, but it is barely red now. Let's take a look at it. So Bitcoin starting to make the move here. So on Friday, right? Friday actually came down here to around 53 and it's starting to move up. I would be very encouraged if Bitcoin gets back up above 60K. If you guys recall, that's kind of where I was really looking at Bitcoin to sustain, and then it actually ended up falling through here. But it's had a little bit of a bounce here from 53 and actually up to 57.5. But no, I'm not changing my stance on Bitcoin. I still think that 100K by the end of the year is certainly possible. Probable, maybe not. Maybe by January, but I still think that that's very much in the cards. Now, this all changes, right? I think that there's going to be some turmoil with cryptocurrency and Bitcoin in particular if we do see a rise in rates. Because why? Right? Because inflation won't be running rampant like it kind of is right now. And so I think for that reason, Bitcoin may have a little bit of a tumultuous 2022, especially if we get more than 2 rate hikes in the year. But I think that some of this is already baked in to Bitcoin. If we already are expecting a rate increase, I would imagine that investors of cryptocurrency and Bitcoin in particular already know that. So that's kind of already baked in. So I don't know how much of a move down we see on Bitcoin if there is rate hikes, but I think that we'll see a move nevertheless. And those are just going to be opportunities for the cryptocurrency. I still think this is actually a good spot for Bitcoin. I mean, we've seen this make monster moves in short periods of time already, right? I mean, we saw this go from what? October 1st, this went from 43,000 all the way up to nearly 70,000 in a month. So is it really that unbelievable to think that Bitcoin can't hit 100K by the end of the year? I don't think so. Just my opinion. I mean, it's not impossible. It's not even unthinkable to have a prediction of 100K by the end of the year. Ethereum, Jeff Chow says, let's freaking go Ethereum though. That's actually green on the day. Yeah, pretty decent move up. I wasn't even planning on really chatting about crypto today, but this is actually pretty cool. Let's just kind of see this move up. So, I mean, here we go again. Ethereum is outperforming Bitcoin, like we've been saying all year. This is the one to own over Bitcoin, even though we like both of them. Just another example of Ethereum outperforming Bitcoin. That's crazy. That's crazy. All right. So what's going on today? Why is the market down? What's going on with Jerome Powell? Why is he doing what it is that he's doing? And so let me just back it up. So what happened? The market was already starting to turn down this morning before the Fed started speaking today before Congress, and a lot had to do with Omicron, right? Omicron, whatever the variant transformer. I'm telling you, Megatron's next. But anyway, Omicron is on the top of everybody's mind. So we saw the futures kind of start to reverse, especially as fears continue to accelerate on another potential variant. So there's that, right? And that's why it started to move down. Well, then Powell comes in before Congress and basically says, hey, it's time to retire the term transitory because we don't think it's transitory anymore. And we may have to talk about speeding up the tapering process of purchasing bonds and slowing down or speeding up, stimulus, the end of stimulus. And so the market reacted very strongly to that. The Dow was down around 300 points, and then it just sharply dropped to being around over 600 points. The 10-year yield tanked as well. It's now down below 1.5. So it's very confusing because if the taper is going to go up, I mean, or get sped up, they're going to speed up the tapering by a couple of months. I mean, you're talking about a few months ahead of schedule. That's a big deal. Then the 10-year comes down below 1.5. You would think that would start to go up a little bit, but all this to say that the expectation of rate hikes could come earlier than expected, and maybe more of them, or maybe even higher rate hikes than people were expecting. So why is this important? This is important because when you look at growth stocks in particular, which many of us are in, right? Many of us are in growth stocks that don't make money yet. They're losing money. Uber comes to mind, right? Uber, Roku is another one it's a really great growth story, but they're not making money yet. Snowflake, right? And take your pick. There's a lot of them that have high multiples, but they're not making any money. High growth, but they're still not making any money. And this impacts those stocks. So if you're in something like that, where it's a bit speculative, they don't make any money, and there isn't any expectation that they're going to make money anytime soon, from an earnings perspective is what I'm talking about, then those stocks are going to be in trouble. And that's what we're seeing, right? We're seeing small caps take a huge hit. The NASDAQ 100 took a huge hit, which is primarily made up of tech. the S&P 500 actually isn't doing so bad. That's only down around 1.7%, which is still a considerable drop. Don't get me wrong. But it could be worse because Apple is actually on fire today. That's up 2% and it's holding up the indexes quite well. So this could actually be a much worse story today than it actually is. So, so what do you do? And what have I done? So let me just go back to talking about Omicron real quick. So the stock market started the day red because of Omicron, and I'd like to address that. So, I'm not gonna sit here and pretend like I am a doctor or anybody who has anything that can speak about the pandemic and how it affects people or anything like that. All I can say is how it's affected the economy up to this point. Variants, COVID in general. So obviously COVID was the biggest hit, right? That was the time in which the market actually crashed. We saw a 30% drop in the Dow. We saw, the all of the indexes took huge hits. Remember, if you guys were around, I mean, the market halted multiple times a day for like a week straight. It was insane. Pretty crazy move, right? Since then, we've seen pockets of volatility as waves and as variants have come along. Most notably, the Delta variant, right? Over the summertime, kind of wreaked havoc on some of the reopening plays, and there was some choppiness here and there. But overall, when those earnings came through the Delta variant, we saw earnings come in this past earnings season, right? Reflected how companies did through the heights of the Delta variant, and they crushed it. The economy is still doing great. And that I think that is what gets lost on a lot of people. And not only that, but then this kind of leads into the inflation story. So the inflation story, there is pockets of inflation that I think are here to stay. They are sticky. For example, I think that rent's probably going to continue to go up. I think energy is going to go up, but I don't necessarily think that that's inflationary. I think that's actually overdue. And we've talked about that. And I think the most sticky part of it is probably wages. We're seeing wage increases, and you can't go back on that, right? You can't just pay somebody, give somebody a $22 raise or whatever, or a 10% raise. Let's just do percentages. 10% raise and be like, oh, you know what? I didn't mean to do that. Things are coming back, and so I'm gonna have to lower your salary again. They can't do that, right? And they have to pass that on to the customer. But the thing of it is that the customer is okay with it. People are still consuming. The demand hasn't slowed down. And it's interesting. David Rosenberg, he's a friend of Tom Lee. Tom Lee retweeted this. It says, iron ore is down 60%, lumber's down 50%, steel prices are down 25%, soybeans are down 25%, corn is down 20%, oil is down 20%, base metals are down 12%, and Powell decides today is the day to jump this inflation bandwagon. Great timing. Great point, by the way. So there are parts of inflation that have been transitory. Lumber has been down for a while. Lumber came down in May. And a lot of the other materials and stuff like that have come down. There are pockets that are probably going to stay. And I think that that's what Powell was trying to address. Here's my other theory about this thing. So Powell comes out and says, hey, we're thinking about speeding up the purchases. I just lost my train of thought. We're gonna speed up the timeline on raising rates. Essentially, he didn't come out and say that, but that's what it was. And then he said we're going to retire the term transitory when it comes to inflation. And so tapering. Sorry, the tapering was the word I was looking for. So then, I think that the reason he was so, I guess, hawkish and really kind of like adamant on this is because let's just say, I think it was a get out of jail free card. Let's just say that Omicron does come out and it actually does start wreaking havoc, and it does penetrate through a lot of the boosters and even maybe some of the antiviral drugs that have started to come out that Pfizer announced, that Merck has, and some of the other ones. I think that this gives him a get out of jail free card. Let's just say that Omicron does start spreading and we do start to see increased cases and people are hospitalized more and all that good stuff. I think that then allows Jay Powell to be like, oh, you know what? Let's just back it up a little bit and equities continue to just rock and roll. Or nothing happens and then he's like, see, I told you. I think that this is a very strategic way of Powell being able to just kind of cover his ass. So, and then address obviously some of the inflation noise that's continually getting louder and louder and louder. But to sit here and think that we're going to experience inflation like we did in the 70s, I think is just laughable at this point. You got a lot of people that did live through the 70s and are kind of like having a little bit of PTSD about this whole thing. And I'm thinking to myself, now listen, I didn't live through the 70s, but I've seen the history books. Nobody's going to be lining up at gas stations, people, on odd and even days. It's just not going to happen. I don't think that we're that to that point. And there are some people arguing that we're going to be getting there if nothing gets done. I just don't think that we see that. There's deflationary, um, I guess, pockets that we're seeing start to take place, and we're seeing that. We're seeing it in materials in particular. So I think there's potential that some of these could go back up. I think energy in particular is going to go back up. We're already seeing that, all over the place. That energy costs are going to rise going through the wintertime. And you guys have heard me mention why I think oil is going to continue to go up, but that's just something that I think, in my opinion, what we're experiencing, what we're going through today, is very temporary. And I think that this is going to be a really good opportunity to buy the dip. I think we see a continued run into the end of the year. The big reason being is because of consumer demand. It's not slowing down anytime soon. Travel demand. If you think that anybody's going to put up with another shutdown, you got another thing coming. That's not happening. People are just learning to live with COVID at this point. And it is what it is. Things are much better now than they were in 2019, and investors in the market are reacting like it is 2020. And so, um, you know, all this to say, buy the F and dip. And I bought more today. I bought Apple today. I thought that was going to be a good play. I'm in Amazon as well. I'm in a lot of the reopening plays, and I'm not budging, not selling anything. I'm not reacting emotionally. One last thing that I kind of wanted to point out was the VIX. The VIX had a huge move on Friday, right? Now, granted, it was low volume. So, bears could come in and run rampant here on Friday, and nobody gave a damn. But if we look at how the VIX moved, it was up, 50% almost, 50% on Friday, on Black Friday. It was the biggest move that the VIX had in one day, the fourth biggest move that the VIX had in one day in the history of the stock market, which is crazy. But you look at what it's done since, and so you would think that obviously Omicron and now the Fed be doing what's doing, you would think the VIX would be up much higher than this, but it hasn't. So the volatility index is starting to come down a little bit. I mean, it started to come down yesterday, and I think that it came up to 28 and got rejected yet again. I mean, it barely was above 28 on Friday, and then ended up coming down, and then obviously got down to the low 20s. And so I think that this could potentially be the top for VIX. Now, the only thing that I would say is that if it gets above 28 and it gets over 30 in particular, I think that we're actually going to be in some trouble here. We could see some more accelerated selling. But I think, to me, in my opinion, that this is probably the bottom, so to speak, or the top for the VIX, but the bottom for the S&P. We look at the SPY, for example, and it looks as if it may have bottomed. We're getting close to or at least close to bottoming. Maybe we have another day of red in us, or maybe this takes us to the end of the week. The 50-day moving average on the SPY is at 452. We're at 456, and it got down as low as around 455 and a half. So pretty close to that. And we've seen it test. I think we test this 50-day moving average. We've seen it before, really all year, with the exception of what happened over September. But really, it had a raging comeback after that too. So I think the Santa Claus rally is still very much intact. And this looks good, man. I think that just looking at the SPY in general should give us a good indicator as to where we might be headed. Now, for me in particular, things are going to change after the first of the year. I think that we will start to see a little bit of a shift in some of those cyclical grandma, grandpa type stocks, and where a lot of these high flying, high multiple stocks that aren't making any money are going to have a really big struggle on their hands. But I think sticking in with stuff like Apple, like the big FANG stock, big large cap techs are going to be a place to live. industrials, energy still going to be there, financials, all those are going to do good. And I think that we're going to see a little bit of a, um, I guess, move away from high speculative stocks. They're still going to be there. They always are. But I think there's going to be less volume in those. Now, just going through some of this stuff, I see Don in the chat. By the way, Don, I am on my own for the next week, 2 weeks. So let's link up for that. I'm sure Don would love to come on the show. We'll figure out a day. Miguel, I like this. Says there are rivers of money on the sidelines. Red won't last in this market. Yeah, I mean the liquidity in this market is insane. So I think that if you aren't aggressively buying here, then what are you waiting for? And that's the thing. It's like people always like, oh, I'll wait for the dip. I'll wait for the dip. I'll wait for the dip. And then the dip's here and then they don't have the balls to do it. So, I like this one. Aging myself, but I remember the 70s. Ask my dad about his 17% mortgage. Yeah, right. No kidding. Like this comment too. I just love that people are not able to control their emotions. Always wait for these days to earn some money. Yeah, this is where the money gets made, folks. 100% agree. 100% agree. Tom Lee is one of my favorite analysts. I follow him religiously. Says by the motherfucking dip. Yeah, for sure. And I agree wholeheartedly with that. I think that buying the dip here is going to pay off big, and I still think that we see a really nice rally going to the end of the year. I think it's going to be important to own the right ones, though. I don't know if I necessarily subscribe to the everything rally that Tom Lee has touted. And I could be wrong. Maybe that happens, but I think there are going to be certain areas that outperform others. And I would venture to say energy is going to be one of them. And I think retail in particular, I mean, we look at things like Walmart, PayPal, stuff that's really gotten beaten down. I mean, PayPal's down 30-40% from its highs. That's insane. And Fang, I think Fang's going to continue to lead too. But I don't know if I would be in stuff like Roku or even Uber, stuff that in my opinion, it's just going to get crushed if we see rate hikes or the 10-year goes up. I think that I would just stay away from that kind of stuff. I'm in DR Horton, for example. It's a home builder. It's not a sexy stock. Some people would probably label me a boomer if they looked at my portfolio right now, because I really don't have anything that would scream, oh, this is a sexy stock right now, right? It's going to make you rich tomorrow or next week. I'm definitely not. I'm at Halliburton. I'm in Halliburton and Disney. Just, I don't know if it's necessarily like I'm in defense mode, but I think I'm just setting myself up for the rest of the year and really going into the beginning of 2022, just kind of like seeing the writing on the wall, getting into stuff that makes sense to be in. I'm just looking at my account right now. I mean, the most speculative thing I'm in is Drive Shack, and I don't really have a ton of money in that. So, Bank of America, Marathon Oil. These are not stocks that like anybody who's watching on YouTube. They're like, well, why aren't you in Palantir? You should be in Palantir. You should be talking about Palantir because everybody else and their mother's talking about Palantir. And I'm like, no. I got to march to the beat of my own drum. And looking at the writing on the wall, thinking to myself, why would I buy something like Palantir that's got a PE of 1 million? And, it's going to be the most sensitive to any kind of rate hikes. Now, it's not to say that Palantir doesn't have a future, and I think it's got good long-term potential, but buying it now in the medium term doesn't make a whole lot of sense unless you're just trying to flip it or something like that, right? But if you're looking for like a medium to long-term type of hold, nah, it's not for me. I like this. Sexy is a large, big pile of cash. 100%. So, if it makes you money, who cares? We got about 5 minutes before the market closes, and we do have earnings play. Zscaler, I didn't know if anybody honestly cared about. We can bring up Zscaler as it comes along, but we do have Salesforce, which has been a fan favorite. Speaking of sexy or not, I don't know how many people actually do like Salesforce, or anybody who's in the crew that likes Salesforce. Put it in the comments. Are you in Salesforce? Do you like it? Why or why not? The stock is down 4.5% after having a really big comeback day yesterday. Um, but this is one that entered the S&P 500 roughly a year ago, almost to the day, and has done really well ever since. So we had obviously a lot of chop in Salesforce, but it's had a really nice comeback. And they have earnings today. Their estimated earnings per share are at 92 cents with 6.8 billion expected in revenue. I think they smashed this. I think they come out to probably around 102 or a dollar two, 102, dollar two, 6 billion in revenue. I'm sorry, 6.9. Ayo, 6.9 in revenue. We take a look at the chart here, and you can kind of see what I'm saying. Like over the last, I would say 3-4 months, really 3 quarters, Salesforce has been crushing it. We zoom it out here though a little bit further, and we see that it recently hit all-time highs. This is back when they actually went into the S&P 500, and then for a good solid 6 months, it just downtrended and continued to go down. We actually had this in our watch list way down here in the low 200s, if you guys recall, which, by the way, you can go check out for absolutely free at ownthechaos.com. Make sure you check out that link in the description. Really like Salesforce here. I think that they do really well. The big thing about Salesforce, in my opinion, is that they thrived not only during the pandemic, but this is going to be one that thrives out of it. And for a lot of the reasons why I like something like a CrowdStrike, while yes, it has a high multiple, they actually do make money and they're continuing to grow. There's a lot to like here with Salesforce. If you guys remember, they also bought Slack, which they've been doing really well with as well. So I'll be very curious to hear how they do with Slack. They, back in September, Salesforce increased their revenue guidance for the fiscal year of 2022 to a range of 26.25 billion to 26.35 billion. And they provided their forecast for fiscal 2023. I think that they could potentially raise it again here after their earnings call. And a lot of this has to do with the fact that we're entering a new digital age of just hybrid work. And I don't like to say the new normal, but there are some aspects where you can say this is the new normal, right? And then one of them is work from home. So I think that work from home isn't going to be a 100% thing, maybe for some people, but I think the more realistic approach is going to be like a hybrid work type of deal. And that's where Salesforce really could make an impact. And I think that that's what's going to continue to keep them in demand. So I really like Salesforce. For that reason, I think they actually do crush earnings. And it's actually, with it being down 4% here as we go into the close, I think it gives it a pretty good setup. So let me know what you guys think. But I really like Salesforce here. Housekeeping says, I'm in CrowdStrike. Can't wait for tomorrow. Yeah, they have earnings tomorrow, and we will be live for that too, or I will be live for that as well. To give you my reactions on CrowdStrike. We'll talk all things CrowdStrike tomorrow, so super pumped for that too. And as we're heading into the close, look at Apple. Apple is about ready. Did it hit all-time highs? It's pretty darn close. 165.70. We're getting close to those all-time highs. Look at this. Let me zoom in here. We'll go to the 5-minute chart. So 165.70 is the all-time high, and Apple is now at 165.40. I got into this today and loving it now. There we go. Running right into the close. We got a minute left. Can we hit all-time highs today? Man, the volume on this has just been insane today. Absolutely insane. What a move from Apple. My goodness. Daniel Camarena, live from the FedEx warehouse. Heavy day today, officially the start of the peak for us. Yeah, man. Good luck to you. I don't wish this season upon anybody. I'd imagine that you are basically just living at the warehouse at this point, from now until the end of the year. Daniel Camarena is living at the FedEx warehouse. Just pop up a tent, man. Dominic asks a great question. Are sports betting stocks an exception? They're not. So it depends on what you're in. They're not so they have high multiples, certain ones, but tons of growth. But if you're asking about DraftKings, for example, DraftKings doesn't make any money, but they have a tons of growth. This isn't to say that DraftKings is not worth owning, because I think longer term you're going to be fine. But in an environment where we are seeing some inflation and raising of rates, no, I don't think DraftKings is actually one to own. I would much rather own something like an MGM. And even right now, Penn National isn't making any money. They said that they could if they wanted to, but they're not. So Penn National is going to continue to get hit probably. I still like Penn National. It's still worth holding. I'm not going to sell it for that reason. But I think the better one to hold in this environment, if you're looking at sports betting, is something like an MGM. They're making money. They're not losing money. They have a really good fundamentals, and that's going to be the safer one to own. DraftKings is going to continue to struggle. And you can see the MGM's actually come down to a pretty decent spot for a potential ad. This might show up on the watch list tomorrow. If you guys want to check out that watch list, you want to get it for free, go to ownthechaos.com. We put out a watch list every morning before the market opens. And yeah, it's good stuff. So the market's officially closed. I'm going to check in on Salesforce. As soon as I get those numbers, I'll certainly get those to you. And if there's any other earnings, there's quite a few that I don't know if anybody was really all that interested in. The only one that kind of popped out to me was looked out to me was maybe Zscaler outside of Salesforce. But let's go to the 1 minute chart so we can kind of continue to take a look at that. Maybe Dropbox if anybody was interested in that, but I don't know if Dropbox is going to do much either. But if you guys are really interested in it, put it in the chat. I'll certainly take a look. Oh, nice. Well, I'm happy to keep you company. Daniel Camarena says mandatory work 6 days, so I'll be watching it from here every day. Love it. Love the support. By the way, we got about 115 of you guys in here, and only about 32 likes, which I think is kind of like weak sauce, if I'm honest. Those are rookie numbers. If you guys could get those thumbs up, put them in there. Turn that thumbprint blue. I certainly would appreciate it, guys, just to help support the channel even more. But yeah, I mean, what a day. So officially, just going to check in here and see where the index is actually closed at today. Looks like we saw maybe a little bit of a comeback on some stuff. Not much of one. But the Dow ended up closing down 651 points, 1.85%. So not quite the low of the day. The S&P closed down 1.9%. NASDAQ was down 1.5%. And then crude oil was actually down another 4.66%. So pretty tough stuff there across the board. But nevertheless, like I said, not going to deviate from my plan. I'm not going to panic sell. This is the worst time to sell anything. If you think that you're going to sell today and potentially buy lower tomorrow, that's quite a risk to be taking. Honestly, I think that's going to be something that I would probably not do, only because you're going to more than likely find yourself chasing it higher. Apple new all-time highs after hours. I saw Apple continue to run up here. Didn't quite hit all-time highs right before the close, but it got close. Yeah, there it is, 166.11. Holy shit balls. Damn. Dominic Swank says my account bounced pretty hard. That's pretty awesome. Looks like mine did too. Into the end of the day, especially with the help of Apple. That certainly helped. Yeah, absolutely. Yeah, I made $1,000 on Apple today. So that's nice. All right. So Apple is still rolling here. That's crazy, man. So we're waiting right now. If you guys are just tuning in on the earnings from Salesforce, it doesn't look like those numbers are in just yet, just based off of how the stock's moving. There's not really much going on here. And now it's plummeting. It's coming down here. Here we go. there might be something going on here with Salesforce. As soon as I get those numbers, I will get them out to you. A little bit of a surprise to see this move down here after hours. Man, I would be really disappointed if they came in and didn't beat earnings. That would be really interesting because I think the climate's just so good for them right now. Okay, let's see here. It looks like the numbers might be out. Salesforce announces strong third quarter fiscal results. They mentioned they delivered another phenomenal quarter, fueling strong revenue growth, margin, and cash flow, says Mark Benioff, the CEO. Don't have any numbers yet. We're on track to reach $50 billion in revenue by fiscal year 26. That is insane. Let me read a little bit more here to see what we got as you guys continue to watch here. Third quarter revenue, $6.86 billion. I said 6.9, so pretty darn close. So they beat revenue up 27% year over year. Huge growth there as far as revenue is concerned. They raised their fiscal year guidance again. Wow. What a crazy quarter. What a crazy year for them. But the stock is down. Not really any reason as to why just yet. And as soon as we find more reasons why this is selling off, I'll certainly give those to you. But right now, these numbers look phenomenal. This may present itself with an opportunity to buy some Salesforce. Which, by the way, I haven't checked on their multiple recently. Their PE is at 64, so that actually is pretty expensive. So this could be why it's selling off. So you're paying quite a premium for something like a Salesforce with that forward PE. This could be more or less of a selling of the news type of deal. You know, they come in, everybody is expecting it, and then they follow through on it, and then it sells off. It's not really that surprising of a move if that's actually what's happening, but I don't see any immediate reason as to why it should be selling off here. But as soon as I get any kind of catalyst or reason as to why that might be happening, I'll certainly send that your way. Wow. Earnings per share, $1.27. I told you guys that I was expecting $1.02. So they even crushed my expectations. This is really interesting to see this sell off. Anybody have Salesforce, by the way? Just out of curiosity, because I think that this is certainly looking like an opportunity for something like Salesforce. So far, I mean, everything that I'm seeing out of this report looks really, really damn good. But the stock continues to sell off. And like I said, this could, unless there's something that I'm missing here. I mean, they came and beat it on what I call a trifecta, right? They beat on top and bottom line, they beat earnings per share, they beat revenue, and then they raised their guidance. So they did everything right, yet the stock continues to sell off. I think this is a classic case of selling the news. Right now, it's sitting at 568. I think that technically speaking, there's an opportunity here, probably around two. What did I say? 568? No, I didn't mean to say that. 268. And I think there's an opportunity here around 262 if it comes back down as low as that. But it may hold this 270 area. If you guys can, if I zoom in here for you, you can kind of see that I've had a couple areas of support marked for Salesforce. So I think 270 is an area of support for it, but then there's also 262, 263 there. So if it holds this area around 268, 270, then I think it might be in good shape to potentially start working your way into something like a Salesforce, just given the monster quarter that they had. Now, again, like I said, you can make the argument that they are a little bit overvalued with a forward PE of around 65. That's quite high. That is a very high multiple. But that's how these stocks go. We look at something like a DocuSign, for example. Where's Docu at these days? That's still high, even though that's come down. Forward PE, 145 times. So, I mean, you know what I mean? Like, it's just crazy with a lot of these tech stocks. 145 is just crazy. So, is Salesforce expensive? I think fundamentally, yeah, it probably is, but it depends on what people are willing to pay for it. And given that growth story, I think it's pretty phenomenal that they are raising guidance yet again, and they just continue to blow expectations out of the water. So, in my opinion, I think this is probably actually a really good opportunity for Salesforce to maybe get in on a position. This might be something that I take advantage of. If you guys are just tuning in, Salesforce crushed it on earnings. Earnings per share, they came in at $1.27. The expectation was like 92 cents. And then they came in at 6.9 billion or 6.86 billion to be exact, crushing that expectation on revenue as well. And then they increased their guidance and they expect 50 billion in revenue by 2026. So that is a huge increase in guidance. And so with the stock selling off here down 6%, this seems a bit silly, especially after a day where it was already down 4%. We're talking, 25-30% down from its all-time highs. So maybe a really good opportunity for Salesforce. May require some patience. I think, waiting to see how tomorrow plays out certainly is probably going to be the play. But if it can hold this 270 area, I would say that Salesforce may be in good shape. If it does not, there's an opportunity, I think, again, down here around 262, 263. So that's kind of my sentiment there. Just checking in with the chat. I got a couple of questions. Chris Larson asks, what is your opinion on Meet Kevin shorting the market at 3.5 million? I don't know if that's a good call. I got respect for creators and that sort of thing. There's a lot that I disagree with that Kevin does. Stock market crashing every 5 minutes isn't exactly the way to communicate to people, but hey, is what it is. So no, I don't know about what's 3.5 million to Kevin at this point. It's relative to his account size. I don't know how much that actually is. So it probably doesn't mean much, even if he lost it all. But I would not be shorting the market. And if I was, I would be in and out 5 minutes, flip it, done. But no, I'm not short on the market, and I think we're going to see a huge move going into the end of the year. So, not something that I would recommend doing in particular. Now, if you did it yesterday and today happened, obviously it makes them look pretty smart. All right. So I think I just pinned a message by accident. There we go. My bad. Acidane says Salesforce getting to hell. They're becoming trash. I don't understand that. It's down for sure. But no real reason for the selling. Yeah, there is no, Miguel, 100%. Way too much money on the sidelines to get it for a crash. Yeah, that's just not happening. And I said this back in March. A lot of people gave me shit for that. I'll have to grab a clip of that video. I put a video out back in March saying that the stock market was not going to crash in 2021. So far, so good on that. Corrections, yeah, but I mean, even with the corrections we've had this year, I think the biggest correction we saw all year long was 5% from the highs. Not even like a 1 day 5% correction. So I'd say I nailed that one. You guys are just tuning in. We got looks like we got numbers people continuing to roll in here. So if you're new, if you just rolled in the last few minutes, I did report reactions to Salesforce. So right now, Salesforce is actually down 7.25%, continuing to sell off here. And I think, in particular, this could potentially be because of a buying the rumor, selling the news type of deal, where people bought into this in expectation of really good earnings, and boy, did they deliver on those earnings. They crushed expectations, coming in at $1.27 earnings per share, with the expected at 92 cents. Their revenue also beat as well, coming in at 6.86 billion. Um, what the expectation was, I think, around 6.8. And then they raised guidance yet again. So they've raised guidance 4 times this year. I think this makes it their fifth. So this is just an incredible quarter by Salesforce, and the expectations are even higher. So they're setting the bar even higher for themselves, yet the stock is down. In my opinion, I think this actually makes for a really good opportunity for Salesforce, not the other way around. So in my opinion, I think this is something that could be a really good opportunity for Salesforce. I don't like what Don says. Don says, too bad. Too bad accuracy doesn't grow on YouTube channels. Yeah, no shit. Clickbait titles do, apparently. And red hair. Listen, I'm going to tell you this right now. I'm not touching this beautiful hair up here. It ain't happening. No neon green, no red, none of that. I actually thought about growing it back out. You guys have to let me know. Maybe I'll put a poll out. Should I grow it back down here? Or should I keep it short? Oh, man. We need a Twitch game. I heard it was a miss for CRM. I'm looking at Salesforce's. This is businesswire.com. It says Salesforce. I appreciate you bringing this out. Devin says double check guidance. Maybe it missed expectations, but they raised their guidance. Maybe the raise wasn't what they were expecting. But I'm reading this right here. Current remaining performance obligation of approximately 18.8 billion. Here, this is from Business Insider. We'll just take a look all together. Maybe I'm missing something. And please feel free to put something in the chat that I might be missing. But I'll share with you what I have. They raised their fiscal year 2022 margin guidance to approximately 1.8%. They raised their revenue guidance from 26.39 to 26.4. Maybe the street was expecting something higher than that, but that's a pretty big raise. So they raised it yet again. I'm not quite sure what the expectation was for a guidance raise on that. But they raised their revenue guidance as well from 27. This could be something. Wasn't that big of a raise, but it was a raise nevertheless. So perhaps maybe the raising guidance just wasn't enough for what the street was expecting. That could be it. But yeah, D Nice says short. Keep it short. Keep the hair short. I think I might keep the hair short, at least for a while. Devin, the earnings per share were $1.27. $1.27 and 92 cents expected. A lot of people saying keep the short hair. All right. Oh, the fiscal year 23 is what freaking investors? That's really what it is. Oh, we got Rebecca with one long hair vote. I'll have to get like a picture of what it looked like now and then what it looked like 6 months ago. And see what people want. The 23, that's weird, Arfin. That's weird. Definitely not doing a mullet though. No. My hair's too good for a mullet. All right. So yeah, if you guys are just tuning in, we've got about 134 of you guys in the house. I certainly appreciate you being with me today. We got 58 likes. If we get that up to around 75, 80, I'll be happy with that. So go ahead and hit that thumbs up. I certainly would appreciate it. And also make sure you're checking out ownthechaos.com. The link's down in the description below. Every day before the market opens, we put out a watch list for you guys and kind of give you a snapshot of what the market's doing and where we think it's headed. It's a really detailed list. And if you guys want to check that out, it's at ownthechaos.com. Or you could also click the join button next to subscribe and become a Chaos Crew member that way as well. Either way, it helps support the studio behind you, the channel as well. Yes, I do well in the market, and I earn a living doing it that way, but it's it's expensive to pay for everything. So in order to continue to support the channel, we need you guys to be channel members, and we need you to be Chaos Crew members over at ownthechaos.com. So make sure you're going to ownthechaos.com, show the support, show the love, and in return, we'll give you a fantastic watch list along with access to my trading account and then my trades as I make them. You get the Discord group. You can even sign up for live streams in the morning. Every morning before the market opens, I also go live, kind of give you an idea of what I'm doing throughout the day. And if you were a part of that, you would have known that I was looking to buy Apple, which I did and have already made about 20%, which is good for about $1,000 on that trade today. So if you guys want to be a part of that and show support, show some love for the crew, go to ownthechaos.com. We'd love to have you guys over there. But Salesforce is actually getting a pretty decent bounce now. Let's take a look at the 1 minute chart here before we head out. Let's take a look at this. They came all the way down to 264. Now, remember, I said around 262, 263 was where I could potentially see the bottom. And on this 1 minute chart here, let's just go ahead and zoom in. It's got a pretty decent bounce so far. Now, who knows if this actually sustains, if the bounce actually sustains. After all, this is the 1 minute chart that we're looking at. So it was down as much as around 7.5%, now only down around 5% after hours. We'll see where this goes. I still think that 270 area could potentially be a good spot to maybe look at for an entry or at least a starting position. And then maybe watch that 263 area again. But really, at the end of the day, you want to make sure that you're looking to see what happens to it tomorrow, because you just never know. Maybe the market, after it opens tomorrow, reacts in a different way. So you want to get some confirmation that it's starting to get bought back up, and kind of see where it goes from there. But either way, I thought those numbers were great. I thought Salesforce had another incredible quarter, and we'll see where that lands. But let me know what you guys think. If you're watching this later, I'd love to get your thoughts as well in the comments. Make sure you're leaving comments down below too. And tomorrow, of course, we'll be back here with you at 3:30 p.m. Eastern time, just to kind of give you a snapshot of what's going on, how the markets are reacting to whatever's going on that day. But we also have some pretty good earnings as well. We got CrowdStrike, Snowflake, Okta, C3AI, Splunk, and that's kind of it. So some pretty good earnings tomorrow. I'll certainly be giving our reactions to that. So if you guys want to be here and get and be a part of the stream, make sure you're hitting that subscribe button. Make sure you hit the notification bell to get notified when I go live. And guys, that's going to do it for me. Thanks so much for tuning in. I'll see you tomorrow at 3:30 p.m. And that's going to do it for me. As always, we'll see y'all before the bell. B. Smith is out.